No deposit home loans. Do they exist? Are they the unicorns of the finance world? We'll find out today in our video to discuss no deposit home loans and what your options are. Option number one, and I would say probably the most popular way of buying a home with no deposit today, is through a guarantor home loan. So Nathan, how's that work?
So practically speaking, a guarantor home loan allows you to lend up to 105% of the property that you're purchasing. It also means that you don't need a deposit. And the way it works is we would actually put 80% of the purchase price on the purchasing property in the owner's name.
So in other words, the property you're buying, the bank will put a good old-fashioned 80% loan against it. Sweet. So then what happens to the other 20 or 25% left over?
The remainder goes on the guarantor's property. So mum and dad's property would have a second mortgage registered on their property there.
Okay, so basically what you're saying is that the deposit part of the loan goes against the old folks' home, and the bulk of the loan, the 80%, goes on my house, and that means I can buy without a deposit.
Yep, and the best thing about it is the full loan you're responsible for. So your mum and dad don't have to make any repayments, and within a 2, 3, 4 year period of time, the property you've purchased should hopefully increase in value. The loan should, of course, decrease in value, and we can look to remove that off the old folks' home.
Yeah, so really a guarantor home loan is a great stepping stone into the property market. It means that you can get in today. They're particularly good if you've got a really strong income, a really high income, but you might be living in somewhere like Sydney or I guess anywhere in Australia where your rent's pretty high and you find it pretty tough to save up. A guarantor loan will help you get into that home. It means you can borrow 105% of the property price, so you can put no deposit down and cover a bit of the stamp duty and the other costs. And then you can use the parents' house as your little deposit bit and pay it down as quick as you can and get into that home.
And I think lastly, just remember, it is important for your old folks to get legal and financial advice to make sure this is something that is suitable to them. Because as you can appreciate, in a worst case scenario, the guarantor's property could be at risk in a foreclosure situation. So do get that advice and make sure it is suitable.
Option number two, a gift. So from a sugar daddy, who?
Yeah, this is another extremely popular option whereby if the old folks don't want to put their property up, they can give you a cash gift, 20, 30, 40 grand. That then can be used as a deposit to purchasing a home.
Yeah, so the cool thing with this is it can be from relatives, it can be, I guess, from friends if you really want, depending on the gift amount. But they give that to you, they have to sign a form that says it's non-refundable and that they're giving you the gift forever, basically. And that can go in the home as your deposit. So that can make up your 5, 10, 15, 20% deposit and you're away at the races. Option number three, and this is a bit of a, pretending it's not real, is you would have maybe seen this one online and we kind of want to debunk it a bit, is using a personal loan instead of your deposit. Now, this was something that was hugely popular a few years ago, Nathan. It's still on a bunch of websites today saying, hey, go out and get one of those loans from Alec Baldwin for 30 grand and that's going to be your deposit. Why can't you do this anymore?
Yeah, the banks used to allow a personal loan as funds to be used as a deposit. Nowadays, that is a no-no. So unfortunately, guys, you can't do that anymore. If you do get a personal loan, the banks are likely to find out the purpose and where those funds are coming from. And as soon as they know you've borrowed money towards your deposit, it's game over.
I think the other thing too that's a bit tough with personal loans is they really murder your lending capacity. So the bank criteria has gotten a lot harder over the last few years, and personal loans, if you're making a payment of $500, $1,000 a month, can actually reduce your lending capacity by hundreds of thousands of dollars. So that's the other reason why I think they've sort of gone, well, it's a bit loose, doing these 15, 20% personal loans and then giving someone a house. It's too much. Let's get rid of it and don't do it. So it's something that doesn't exist anymore. Sorry. Number four, and this one doesn't really apply if you're a first home buyer, but it still applies if you've got an existing home, is using equity in an existing property. So Nathan, tell me about this. So you don't need any deposit, right?
Yeah, this is the fastest way to borrow more money because effectively savings takes time. A property that you purchased 3 years ago that has increased by 300 grand. Well, guess what? You can use that equity to leverage to purchase the next property. So it's really neat. It's a great way to be able to expand your portfolio faster and without having to save the deposit.
Yeah, I think the only trap with this one is getting into too much debt. So just make sure you do your cash flow, make sure you do your modeling to ensure that you can afford it, because then you are borrowing 100% potential on the new property because you're not putting a deposit in. So your payment's going to be much higher than if you got a lower loan. Option number 5. Now, we would have previously spoken about self-managed super funds, but again, this is one that's really eased up over the last few years. And so buying a home with your super is much harder these days, especially if you want to get a loan. But something that is much easier is the government's first home super saver scheme, the FHSSSS. We've got another video on this, but Nathan, just touching the high notes, what does the first home super saver scheme do?
Effectively, it allows you to build a deposit whilst not having much of an impact on your cash flow that you're receiving from your employer, because effectively you'll increase your super contributions each month or week or fortnight or whenever you get paid, and that gradually builds over time. Anything over 9.5% that you're contributing towards super will go towards the first home savers super scheme, and then can be accessible at a time when you're ready.
Yeah, so there's a bunch of criteria, and like Nathan said, the ways of setting it up can be a little bit complicated. We've got an article on our website that you can check out that tells you about the benefits of setting it up, the contribution caps, because you can't just put in unlimited money. It's actually limited to about $30,000 over 5 years. And there's a couple of different calculators you can play in there to see if it's worthwhile. But like Nathan said, in a lot of scenarios, you can actually reduce your pay by, say, $100 a week. But net after tax and everything, it doesn't really make that big a impact. It's crazy. So I think definitely check that out if you haven't got your deposit together. That's a good way of buying a home with no deposit and not affecting your day-to-day cash flow. So there are 5 no deposit home loan options, how to get a house without having a deposit at all. Which you're going to use? I think it's fair to say probably the Guarantor one's the most popular one these days, but there are still a couple of ways.
With the gift though, I think the gift's still quite popular. So the first 2 are extremely popular.
Ask mum and dad. But anyway, which did you like? Let us know in the comments below. And if you've got any questions, hit us up at huntergalloway.com.au.